Hello, listeners. Welcome to Business Valuation Insights, where we dive deep into what makes a business truly valuable beyond the numbers on a balance sheet. Today, we're exploring the valuation of a daycare business using the Eric Jordan's 25 factors affecting business valuation methodology. Let's get started with the first factor. 1. Purpose. The very essence of Anytown Daycare transcends basic child care. It's an institution dedicated to early education and nurturing the next generation. This focus on education significantly boosts its valuation because it's not just about watching kids, it's about preparing them for academic success. This strategic purpose means higher enrollment, longer client retention, and premium pricing. An accountant might miss this, valuing it as just another daycare. But our method captures this added value, showcasing how educational initiatives lead to higher ROI and community goodwill. 2. History. Anytown Daycare has been a pillar in the community for 4 years, showing resilience through economic and health crises, adapting to new educational trends. An accountant might look at a dip in revenue and see decline, but we see history as a narrative of growth and adaptability, adding substantial value to the business by demonstrating stability and community trust. 3. Financials. With a normalized net income of $120,000, the financial health looks good on paper. But it's not just about profit. It's how those profits are reinvested into education and staff development. An accountant might overlook these strategic investments, but we see them as vital for long-term sustainability and growth, increasing the business's value through better service quality and client retention. 4. Return on investment, ROI. Here, ROI isn't just financial, it's about the returns from educational excellence, government subsidies, and low staff turnover. Traditional ROI might miss the long-term benefits from these investments, but our approach values how these elements contribute to customer loyalty and market positioning, directly impacting financial returns. 5. Liquidity. In childcare, liquidity means how quickly you can turn assets into cash while maintaining quality service. An accountant might overestimate this by not considering the specialized nature of assets like educational toys. Our methodology looks at how well Anytown Daycare manages its cash flow to meet obligations and seize opportunities, providing a realistic view of financial agility. 6. Cost of liquidation. Liquidating a daycare isn't just about selling desks. It's about the loss of brand equity and community trust. Accountants might focus solely on asset values, but we consider the broader implications, from lease termination to the impact on staff and clients, offering a more accurate liquidation cost estimate. 7. Hard assets. These are more than just furniture or toys. They're the tools of educational enrichment. An accountant might depreciate everything uniformly, but we value these based on their utility in enhancing educational outcomes, acknowledging their role in attracting and retaining clients. 8. Utility, sustainability, and scalability. Anytown Daycare uses its resources efficiently, showing sustainability through community integration and scalability through potential new programs or locations. An accountant might only see current capacity, but we look at how these aspects promise future growth, adding to the business's valuation. 9. Research and development, R&D. While not traditional R&D, the continuous improvement in educational programs is crucial. An accountant might view this as an expense, but we see it as an investment in future competitiveness, enhancing the daycare's educational offerings and market position. 10. Processes, procedures, systems, and documentation. These are the backbone of operational excellence in childcare. An accountant might not weigh these heavily, but we recognize their importance in ensuring consistency, compliance, and scalability, which are fundamental to a business's value. 11th, shareholder agreement. Even if Anytown Daycare is currently a single owner operation, considering future growth or partnerships is key. An accountant might ignore this, but we assess how well prepared the business is for such scenarios impacting its strategic value. 12th, management capability and workforce. The expertise of the team at Anytown Daycare directly influences its valuation. An accountant might focus on costs, but we value the human capital for its direct contribution to service quality and client satisfaction. 13th, client base. The trust and loyalty of a community are invaluable. An accountant might only see numbers, but we evaluate the client base for its stability, growth potential, and the loyalty it brings, significantly increasing the business's worth. 14. Supply chain. For childcare, a reliable supply chain ensures quality and safety. An accountant might see this as a cost, but we recognize it as crucial for operational resilience and cost efficiency. 15th, distribution network. In this context, it's about community connections and partnerships. An accountant might not give this due credit, but we value how these networks enhance brand visibility and client acquisition, vital for valuation. 16. Marketing, advertising, PR, brand. Anytown Daycare's marketing goes beyond expenses. It's about building a brand that parents trust. We see marketing as an investment in future revenue and client base expansion. Where 17th, dominance in the market. It's not just about size, but about leading in quality and niche services. We value this dominance for its impact on reputation and market influence, which traditional accounting might overlook. 18. Industry benchmarks. Anytown Daycare excels in areas like educational outcomes and client ratios. We use these benchmarks to highlight its superior performance, justifying a higher valuation. 19th, terms of lease. Favorable lease terms are strategic assets, providing stability and expansion possibilities. We consider these in valuation more than just an accountant would, focusing on long-term benefits. 20. Terms of sale. Even if not for sale, understanding how Anytown Daycare would fare in a sales scenario informs current valuation, something traditional methods might neglect. 21st, minority interest. Looking ahead, we assess how managing minority interests could enhance business value, ensuring strategic growth while maintaining core values. 22nd, special interest. Purchaser. Anytown Daycare could attract buyers interested in its unique educational approach. We account for this potential, recognizing how specific buyer interest can elevate valuation. 23rd, geopolitical considerations. Policy shifts in childcare can affect operations. We evaluate how Anytown Daycare navigates these changes, reflecting adaptability in its valuation. 24th, risk. We look at all risks, from compliance to financial, valuing the daycare's preparedness, which an accountant might not fully capture. 25th, opportunity. Finally, the opportunities for expansion or innovation are significant. We consider these as part of the valuation, showing a business ready for future growth. Valuing Anytown Daycare with the 25 factors methodology reveals a business rich in potential and impact, far beyond what numbers alone can show. It's about education, community, and strategic foresight, making Anytown Daycare not just a child care center, but a community cornerstone with enduring value. Thanks for tuning in to Business Valuation Insights. Remember, the true worth of a business lies in its story, its community, and its potential.
Pin.ca